All right, guys, it's time to do the live stream here. We have the S&P 500 up at 0.4% today. We have the NASDAQ 100. It was up 1.2%. And we had the Russell 2000 really lagging the bunch, only up 0.8 or down 0.8% on the day. You only had 5 out of 11 sectors participating in this market, and the breadth was really, really weak. So we're going to go over the S&P 500, the NASDAQ, the Russell 2000, really what I'm seeing out there in the market right now in terms of opportunity, trade setups, and so forth. First, if you're watching this on YouTube, make sure to hit the like and subscribe button, especially if you want to ask questions. I'll be taking all of your questions, be giving you my best answers, and we'll be going through this all together today. So excited to have you guys all here, and let's go ahead and knock it all out here. So, like I said, market was all up today, except for the small caps. The S&P 500 and particularly the NASDAQ 100 really saw a rotation back into those names after a pretty good, 3-day pullback overall. So what did you see, Ryan? You didn't necessarily see semiconductors. There were some semis that ran today, but mainly you saw all of the big tech stocks, big like Fangum, Meta, Amazon, Apple, Netflix, Google, Microsoft, and Tesla. All of those guys ran. NVIDIA, not really so much, but that when you have, let's see here, you have Amazon up 4.3%, you have Google up 2.3, Tesla up 2, Microsoft 1.8, Apple 1.7, and Meta 1.2. Combined, that's $8 trillion of market cap. You take the Russell 2000, which has no exposure to those. It was down 0.8% because there was none of that influence. The S&P 500 was only moderately higher compared to the NASDAQ 100 because of the fact that it has more saturation versus the NASDAQ 100. It has 500 stocks. NASDAQ 100 only has 100, obviously. You also have, there's all sorts of crazy, weird stuff going on. You have negative breadth of 2-to-1 today. So twice as many stocks were going down as what was going up. On the S&P 500, 325 stocks of the 500 was going down. That means only 175 was going up. On the NASDAQ 100, you had 60 out of 100 going up. So that's where your strength was really found in, was in the NASDAQ 100. It was helping the S&P 500 out as well. But even then, you still had like 40 out of 100 stocks going down when you're up 1.2%. I would have expected it to be more like 75 to 80% of the stocks on the NASDAQ rallying. Also, Russell 2000, their total market cap, we're talking about like 2,000 stocks here. Total market cap on the Russell 2000 is $3.1 trillion. When you take these stocks that I just listed on the fan, these six stocks, Amazon, Google, Tesla, Microsoft, Apple, and Meta, you're talking about a combined amount of $8 trillion. So they're almost 3 times the size, just those 6 companies, 3 times the size of the Russell 2000. So you can see why there was so much strength in the NASDAQ today, and people are continuing to FOMO into that area. Now, let's go ahead and look at the charts here. Again, make sure to like and subscribe. Make sure to post your charts. We'll go over, or your stocks, and I'll go over them on the charts. There we go. Let's see here. Get my face up there. Good deal. And good to see you, Alex. Luo Mio. All right. Good to see you there as well. So I can answer this question pretty easily here. What happens in the unlikely event the SEC doesn't approve the BlackRock application? If they didn't approve it, I would expect that there was going to be a huge sell-off in BlackRock, probably equal to what we've seen, in its rally here in the last few days. That's what I would expect for it to have happen. So good question. All right, let's go ahead and look at, we're going to go through the sectors as well. So I talked about this before. There's this huge price level support. This goes back and forms that head and shoulders pattern that confirmed so nicely back in 2022. And then we broke out above it. And so we pulled back 3 days, very orderly pullback. You can see here the volume was pretty light on those 2 days. Then you get a bounce. Look how light the bounce is, though. I mean, in terms of volume, very little volume on it. You're starting to see that summer volume kick in a little bit. Very dull trading days is what essentially you can expect out of the market right now. But this pullback recaptured the 10-day moving average here after opening below it. Didn't quite get to that test level there. So I still wouldn't be surprised if we went back down to 432 before we ultimately saw a bigger bounce. Again, this level breaks, then you want to start watching like this blue level, this yellow level, and this purple level of support, because as each level of support breaks, you want to try to find that next support level. Where could it go to for the next test? So SPY right now, it's rising in sympathy with the NASDAQ 100, mainly because of your big tech plays. On the Qs, Big shout out to Craig and D Will. Glad that you guys are here. Kevin as well. Go Knowles. Holy cow, man. It's because I got the Hurricanes hat on, right? Shoot. I actually graduated from UCF, but I grew up liking the Hurricanes a lot. My whole family's from Miami. So Skyheart, hey man, good to see you here as well. All right, so where were we at? So I want to show you some of these, some really crazy readings. T2108, this is the percentage of stocks trading above the 40-day moving average, down 6.5%. That means a lot less stocks are trading above their 40-day moving average today, trading below their moving average today, 40-day moving average, than there was yesterday. So that's starting to diverge to the downside. But what's really odd is the VIX. It doesn't matter if the market's going up or down. The VIX just keeps on going down as well. I mean, we had sell-offs. VIX hardly even paid attention to it. It sold off all day. If you look at this bottom left-hand side of your screen, this is a 30-minute chart on the bottom left-hand side. 12 out of 13, or actually it was 10 out of 13, 10 or 11 out of 13 bars to the downside. And essentially any of the green bars are basically doji shooting star type kind of candle. So it wasn't that big of a deal, but that is nothing but solid selling all day long. And now we're in the 12s. You have to go back to freaking, holy cow, where do we go back to on this? Hold on. Pulling up a weekly chart of the VIX here. You can see we're going back to the pre-pandemic levels here, where I think back in January of 2020, we were reaching levels of, we got as low as 1175. I wouldn't be surprised if we hit the 11s in this market. I wouldn't be surprised if we hit the single digits, just because there's such a disconnect right now with the VIX. It's been oversold. And I know it's an indicator, not so much a like a stock or an ETF, but it's still been oversold since April 6th for 2 solid months. Has not gotten above this 20 mark on the stochastics here on the bottom of the screen. That's some serious uncharted territory. Now you do have a little bit of a bearish wedge-like pattern that's forming on it. Do I put a lot of merit in it or a lot of hope in it? Not really at all, because there's just such a perpetual sell. You get like 1 or 2 days to the upside and it's immediately sold. I mean, it is pounced on each and every time. Now, going back to 2018, what I would warn you about, and some of you guys may have remembered this time period, we got into some crazy single digits in 2018. Pull it up. This was a big episode in the market. In 2 days, we go from being in the 12s all the way up to like 50, 49. What was it? The high 50.3 on the VIX. 2 days. And let me tell you, there was implosion in the market. There was a lot of ETNs that had to shut down because of the volatility. I think there was one that said if it goes up more than 110% in the day, they shut down the whole thing. People lost their money. That was a crazy time. That's why you got to be really careful when you're shorting the VIX. You do not want one of these things. You never want to put yourself in a position to where if something like this were to happen, not that it happens all the time. I'm going back to 2018 to show you the last time where something that crazy happened. But if it did happen, you don't want it to wipe you out. And that's what happened in this particular instance. I mean, we're talking about going from 13 all the way up to 50 in a matter of 2 days. So don't be that person that gets caught, with their pants down on that in that regard. You have a little bit of support here where it's tried to bounce. I mean, you've gotten a couple of bounces here. Would it surprise me if we did bounce? But I don't expect it necessarily to hold. I wouldn't get even too excited until we can actually break out of this declining trend line here. And this goes back to when the banking crisis started back in March, when we bailed out the banks again. So, and I'm seeing all your questions there, so we're gonna get to those in just a second. The thing that I want to look at a little bit further, breadth on the Russell 2000 was 3 to 1 to the downside. That's very heavy breadth overall in the market, 2 to 1. The only positive breadth was in the NASDAQ 100, and even then it wasn't that great. I would expect at this point with this kind of selling, I wouldn't be surprised if we saw some kind of like a short-term pop, especially with the volume getting really light. But after that pop's done and over with, I'd be looking for a pullback to this 179 level. It just seems like nobody's interested in the small caps right now. You're seeing what you're really seeing more than anything is just everyone still FOMOing into the big tech stocks and just trying to hope that there's another person that's willing to buy it at a slightly higher price than theirs. So looking at all that, where are some of the opportunities? We did the top-down trading strategy last week where we talked about the different sectors to look at. One of them that I looked at was that I was kind of positive on was the industrials. And you saw this 2-day pullback and it bounced yesterday, things looking good, but then it pulled back today. So that's kind of in limbo right there. is XLI going to hang on there? It's still holding on to support, but it didn't get a follow through today to the upside. That would have been a big deal for it, but it sat out that rally. But they're not the only ones. Really, the only ones that are rallying is XLY. So the question is do you just keep chasing XLY here? Because, you're getting a lot of support out of Amazon. It was up over 4.3% today. So you got Amazon at 4.3% breaking out. You also have Tesla making a big push higher off of those lows. It went from 250 back up to 264. That is a significant move right there. That's like 5+%. So trying to catch my breath here. XLY, you can jump in after this, but then you're probably just chasing the returns that you're getting from those two stocks. Like let's look at, and I haven't done this yet, but let's look at what the XLY sector look like today. You have 53 stocks in it. XLY was up 1.3%. Only 19 out of the 53 stocks in XLY were trading higher on the day. So that means more than 60% of the stocks in XLY were down, despite the fact that XLY was up 1.3%. So what are you doing? You're just chasing Tesla and Amazon by jumping into XLY. Same thing with XLK. Really good bounce day, 0.8%. I would say it's a little bit better on XLK than what we saw on XLY. Yeah, it's like about half of the stocks were trading higher on XLK. But that's still not good breadth. That's 1-to-1 breadth on a day where tech went up 0.8% on that particular ETF. So you get a good bounce, but really, do you want to buy a bounce right here just after a 3-day pullback, very shallow pullback? Not really, because it's what you really need is pull it back to like 160 or something, just so you can get a more meaningful bounce to the upside if it does still want to bounce at that level. But at this point here, I'm not really getting a good reward risk ratio. I'm just hoping that it keeps going higher. And so when you're jumping into XLK, you're chasing these gains here. Apple, which had a huge move, that's a $3 trillion company right there, or pretty close to it, going up 1.7%. Yeah, it's going to pull up everything. Same thing with Microsoft. Microsoft is a $2 trillion company, up 1.8%. Of course, it's going to pull up everything. So really, that's what you're chasing when you're jumping into XLY or XLK. And we already see that these stocks are really, really overextended, even with the pullback over the last few days. So XLC, you have a broken bearish wedge. It broke yesterday. You have Google, which is a big part of that component here. You have Google, this little purple box right here. It's been trading sideways, and it broke below it yesterday. Big rebound today, up 2.2%. But again, is that really a chart? I think this is one of the ugliest charts right now in all the FANG stocks. No way I'm going to play that one. So XLC's out, because that's really all you're chasing in XLC is probably the returns you got out of Google and Meta today. Again, let's look at how XLC, I'm just looking at the bottom right-hand corner. 11 out of 24 stocks on XLC were trading higher today. So really, you weren't getting much out of it except for what you came away with on Google and Meta. Yeah, a couple others, ATVI, it was a TMUS. But really, the terms of market cap, Google and Meta was the one that was stealing the show. What else are we looking at here? XLV, this one actually has some promise. XLV, declining trend line, has tested it multiple times, rejected it. You saw another rejection back on Friday. What did you see today, though? A slight break above it. So tomorrow I would be looking for whether or not it can break back above the highs of the day, and that gives you a potential breakout above this declining trend line right there. So there's some promise there. And then we talked about XLI. XLE, there's no consistency there. Yeah, it held the bounce yesterday, but then it broke back below it today. Energy is probably the most inconsistent sector there is right now. Them and gold. It's just very difficult to play those. And let's see. Did I have any other ones? XLRE, it's not close to breaking out. Neither is materials. There are some breakout opportunities, but it hasn't quite done what you would like for it to do. So, all right. So one more chart that I want to show you guys, and I'll get to your questions. Year-to-date change. What are we noticing here? There's more red showing up. Tuesday, there was only 2 sectors that were trading on the red for the year, utilities and energy. They went a little bit deeper since then. And then we got 2 more joining it with real estate and financials. You get a 5% sell-off in this market. You're only looking at, 3 to 4 sectors trading in the green for the year. That's a very, very troublesome market. That very narrow leadership. Again, it goes back to the whole idea that it's just a handful of stocks that's ripping this market higher based off of what you're seeing out in technology and consumers. So, I mean, look at semiconductors up 56% on the year. Totally crazy. That's in part due to NVIDIA and AMD and Taiwan Semiconductor and AVGO, Broadcom. And consumer cyclicals, you got Amazon, Tesla, Home Depot. Not Home Depot. Where is that next one at? Netflix, 43%. So Tesla, Amazon, 54 and 114% respectively. All right, guys. With that all being said, let's look at y'all's stuff here. Alex, you got tagged out at Starbucks. Let's look at this one. I was looking at this earlier today. There's a little bit of a frustration in this one because you're not really getting that upside. So it's getting weighed down by this declining or this rising trend line here off of the May lows from last year. It broke that, didn't break the big support level that would have essentially put a top in on the stock. It held it barely, and then it forms this double bottom, breaks out, and then finds that resistance at the broken trend line, and then it pulls back today. You get a nasty wick there. I can understand why you got stopped out. That's going to happen. You want to know what happened to me today? I got knocked out of SQ, and of course it just bounces right off of that support level and keeps going back up. SQ's been frustrating for me. I had 2 trades in a row, 2 duds. So Starbucks, it looks like it closed just below that support level right there. If it were to break back out again, I think probably for me, I'd probably need to see it back above the highs. So that would be like 102.46. And I would probably put my stop loss below this 200-day moving average there, and that's essentially where it bounced at. If you look at it right there at that 200-day moving average, 99.57. It's easy to see it in hindsight, but at least going forward, it's something to be mindful of. Let's see, what else do we have here? Talked about that already. IWM was down and QQQ was up. The mega caps are what's keeping the market up, shorting Tesla. So be careful when you're shorting things, because one of the things that I learned early on in trading is like, don't step in front of a freight train expecting it to stop in time. You also have heard the expression, the market can stay irrational longer than you can stay solvent. Tesla is extremely, extremely irrational right now. Extremely. Now you have some resistance here at 300 that could come into play, but everybody's buying every dip on it right now, and they're being rewarded for it. So what's the behavior likely to be going forward? Keep buying it. They got to get burned on it. And you would have thought that maybe they would have felt that way after it tried to rally yesterday, and then you get this bearish engulfing candle pattern, but it's not. They rallied it right off the lows today. Tomorrow is going to be absolutely critical for the stock to see some kind of a break. Now you got a little bit of a support level here forming in the short term. If it can get down below 247, there may be some life to it to the downside. What else are we looking at here? We got Kevin, man. He's repping the nose here today. That's all right. That's all right. DWIL, D Will, good to be here. Thank you for the market breakdown. No problem. Craig Swarthout. I don't know if I Swarthout. I'm not sure if I'm saying that right, buddy. I apologize for mispronunciating that. Appreciate what you do. Thank you. Good to see you, Skyheart. What do you think about DB? Let's look at some DB. The Deutsche Bank. Boy, this is the one that just kind of came back from the grave here lately, right? This was the one where people were like freaking out about it. But just looking at some of this, so there's definitely seems to be some support around this like 10. What are we going down to? About 10.05. If it breaks that 10.05 level, definitely would be a little bit concerned about it at that point in time. Yeah, I mean, you're looking at 10.05, 10.06 right here. Then again at 10.05, that you could even maybe like give yourself a little bit more wiggle room and just say, okay, if it breaks below 10, then you're going to want to be seeing what does it do with this rising trend line here off of the October lows from last year. That's going to be around 973. But one thing you want to be cognizant of, first of all, it already has tons of gaps each and every day just because it's traded overseas. But DB has a lot of headline risk to it. So for me, even shorting it could be a dangerous proposition, because if something happens that benefits their balance sheet, could create, you know, a nasty short squeeze to the upside. So, all right, Ryan, if you can't watch it, but can you take a look at SQQQ? One of the things you want to remember when you're looking at SQQ or SPXU or TQQQ, any of the ultras, it's best to do the technical analysis on the underlying asset that it's trying to duplicate. So SQQ is trying to give you a 3-to-1 inverse return of the Qs. Always best to go back to the Qs, but one of the things to be mindful of on the Qs is that when the trade doesn't go in your favor, you don't want to hold on to it, because these things are not made really for long-term investing or long-term holds, because they continue to deteriorate as they reset each day in order to give you that 3-to-1 return. There's a whole bunch of more complicated stuff that goes into it. That's probably not for the scope of this show, but nonetheless, it deteriorates. There's a huge time decay element the more inverse it gets. Like 2-to-1's not going to have as much time decay as 3-to-1. 3-to-1's going to have way more. So with the SQQQ, again, kind of going back to the Qs, you want to make sure that we're actually seeing some kind of technical breakdown on it. And right now we're not seeing it. Instead, you essentially had like a bullish engulfing candle pattern. I think it missed it out technically by 1 cent, but I think you can almost chalk it up to a bullish engulfing candle pattern. So, all right, glad I pronunciated that one right. So next question, Tesla to 300 or lower high. So with Tesla, yes, there's a little bit of support here. We talked about it a little bit. And then I mentioned this declining trend line here. The reason why I mentioned 300, and it's probably a little bit less by the time, if it does end up testing it, it'll be a little bit less. Like right now, it would be like 301. In about 1 or 2 weeks, it'll be somewhere around 299, but it's a declining trend line. It's rejected price multiple times. The only problem is this time we haven't tested in a long time, over a year. We're talking about 14, 15 months since the last time it was tested. If it gets to that level, that would be where I would say, okay, there is a reward to risk ratio to the downside setting up there, but you need a little bit of a confirmation. You need to see some rejection at this level in order to get short. Now, if I'm long on it and it gets up to this level, I'm probably wanting to take some profits off the table at least, and then sit back and say, okay, let's see what it does with this price level. Can it break through that 299, 300 level and go from there? So you're thinking about shorting it? Yeah. Going back to DB for Skyhard here. What you want to do is you want to be mindful of the 2 support levels. So if you get short at 1019, there's a lot of support at 1005. There's also some support at 979. The second support level, how much, I'm not sure, because it's really only been tested one other time, but definitely something you want to keep a close eye on. Yeah, I think those are the only 2 real support levels here that I see. But in any case, good questions here. A little bit shorter of a one than last time, but nonetheless, glad you guys were able to be here for this. I would wrap it up by saying this about the overall market. Recognize the fact that it's very, very narrow leadership. I don't think I'm the only person out there saying that. I think probably everybody's saying it, but it's very, very much true. But it's important to understand why that's causing such a huge rally. We just talked about how the 6 stocks that rallied today, that represents almost 3 times the market cap of the Russell 2000 just with those 6 stocks. Apple is almost bigger than the entire Russell 2000 by itself. It's a $3 trillion company. I think they're 3.1 trillion. So when you're getting into these trades, it's very difficult to find trades that are working outside of it. So you really have 2 choices. You can chase these 6 to 8 stocks that just continue to rip higher, a lot of it on AI news, or number 2, you can hope that capital flows back into everything else. You know, from like the Honeywell trade setup that we talked about the other day. I ended up jumping into that one. Haven't got anything out of it yet. SQ can't get it to bounce. You can't get the Russell 2000 to really hold it onto a gain. It looks like it's pulling back to that 179 area. It's a very, very difficult market. I would probably say, goodness, since I've been doing SharePlanner, probably the hardest market that I've done. I would say since I started SharePlanner in 2007, this is probably the most difficult trading market I covered. I think 2015 was also very difficult. 2020 was just very odd. But yeah, this one is just very, very difficult because there's such limited stocks that are participating in the rally. If it's not tech and discretionary, and those are just a handful of stocks there, you don't really have an edge up on that market. So in any case, make sure you've liked and subscribed to the channel. What else am I missing here? Click join down below on YouTube if you want to get all my stock market research each and every day. It's really good stuff. And God bless and thank you. Take care, guys.